This is the Friday, June 12, 2020 version of the Market Plus segment. Joining us now through the power of technology, Naomi Blohm. Hello, Naomi. Good to see you again.
Hey there.
So we could talk about a lot of things. We have a lot of dairy questions. I was telling the crew before we taped the program in this one, we save all those good dairy questions for you. Are you okay with that, or do you always feel like you're being typecast?
I'm happy to help out in any way that I can.
Well, we have a few. This is the segment that we put on video. We also put in podcast form. So hello to all of you who are either watching or listening. Let's open up with cotton, though. Cotton is one of those that had been going up. China was the thought. Then it turned rainy in the Delta. Now you went south with the contract. And then it rallied again. Do I have it pretty accurate?
Pretty good, yep.
But why?
Yeah, so you hit the nail on the head. It's been in a nice uptrend for 2 months. Exports had been improving. China has been buying a lot. The soggy weather in the Delta was worried it would affect the crop. And then this week on the USDA report, they surprised everyone when they said that ending stocks in the US were 8 million bales, which is a 13-year high for the United States. And then they also have the global carryout numbers pegged to a 6-year high. So huge, huge numbers. And that just sent the market price lower. So it still isn't an uptrend right now, but where it's going to be for direction this coming week, we need to keep an eye on exports and weather, but it's at risk of losing the uptrend that it's gained.
All right, this week we had one heck of a weather system that came. Crystal ball goes from the Delta to north, hit us, hit you, into Michigan. Left a lot of soggy fields. We already had prevent plant stories coming out in Illinois. So Gary in Wilton, Iowa is asking, how low will these prices go this summer? Because, the quote-unquote experts, and he laughs there, he still predicts record acres in production of corn. That's what the experts are saying. But he goes, how low will the prices go this summer or fall? And do you see a jump because the world is hungry and they have to buy it somewhere? The food story and the global food story has played way more into this market than I think we've talked about in the past.
Yeah, and I would answer his question this way. I still do feel that we're going to see a summer rally. And on the summer rally, it's going to be a weather scare. And then we'll have 2 more important USDA reports coming out at the end of June. It's the planted acres number and the quarterly stocks. And then we'll have the July report, just the regular WASDE report in the middle of July. And from those 2 reports, we'll be able to have a better foothold of where the planted acres actually are, how the weather is doing. So over the next 3 to 4 weeks, this is going to be your opportunity to get your pricing done on a rally. And then you know how it goes. Every year when we have that June or July price peak, everything comes crashing down and it doesn't come back and look up until late August or early September. So how low could it go? To answer the question, well, for corn, let's say that the acres are as big as what the USDA is saying. And let's say that we have essentially trendline yield. If that 3.3 billion bushel carryout is a reality, then you could see every reason to have a 2 in front of the price of corn futures. Now, on the flip side, if we have any significant weather issues this summer, and some of my fun old-time clients who are into wives' tales and tracking history said that the last time Wisconsin got a hurricane remnant, like we did this early in the season, 1988. And then once that hurricane came up, the water shut off. So there's weather forecasters, 2 predominant ones, who are saying that it's going to be hot and dry now for a couple weeks, with July having scorching temperatures. Now, if that's the case, what we would have to have a significant price difference of outlook for corn, if yield can come into like what it was this last year at 167, 168 for bushels, then that would take 1 billion bushels off the carryout, and that would be a significant game changer. So weather is always the predominant factor here, but do pay attention to the seasonals of this marketplace. Make sure that you're making cash sales on the rally, because usually we find out the crop is a little bit better than we thought. So just make sure you're making the sales on the rally. Think about forward contracting and
and think about the early corn crop that went in. And if this hot, dry weather comes in July after pollination, It doesn't have as near the impact on the corn crop, and we'll see if Chicago picks
Correct.
up with that one. All right, Jackie in Colorado is asking about soybeans, Naomi. She's asking, what will the 33-day new crop carryout mean for soybean prices?
Yeah, and that's significant. We touched on the show about how tight the new crop carryout level is when it's coming in near 395 million bushels. So that's significant. And if those acres in North Dakota don't get planted, and if there's a weather issue, it's a totally new ball game. You have to also remember that the USDA has the demand for the new crop pegged closer to 2 billion bushels for exports, just over 2 billion bushels for the crush numbers for crush demand. So I think we could potentially absolutely be on track for those. Of course, now I'm going to say the C word, if China does continue to buy at the pace that they've been buying from us, there could be a significant reason to see a bean rally this summer based on weather issues. Or that might be something that sets us up for a fight for acres come next spring, depending on where the carryout ends up being for soybeans.
Or who needed beans over the last 8 months because one country is out and another one comes calling. There was the report of China is done buying soybeans, but all they've done since that report is buy soybeans.
Exactly.
All right, that's conspiracy theory number one. Another one, this one's about volatility. We've talked about weather as that's the big factor right now. But Mike in Stillwater, Oklahoma, where I've heard this week it is still dry down there. Do you see more or less volatility over the next 12 months?
And I think it's going to come in spurts. I think you're going to have some spurts where you're like, hold on to your hat. Where is this marketplace going? Who would have thought it could do what it's doing? And then you'll see lulls where it's not doing much of anything. The biggest factor is going to be keeping an eye on the value of the US dollar. The Fed is saying that they're going to do everything they can do to keep the interest rates low until 2022. A lot of times when we see those big Fed stimulus packages, sometimes that can make our US dollar go down. That's the case. That's really exciting for commodities because that helps our export market. So I think there's some potential there for extreme volatility, but also some times where we'll see a lull. So be ready for both.
There was a story this week that, yes, the dollar could crash. And, you know, there's always that when you read the economic stories, what is bad in Wall Street isn't always as bad on Main Street. And that's just always those counterbalance things that you need to think about. Conspiracy theory number two. This one comes in the food prices. This is Bradley in Upland, Nebraska. I'm skipping a question here because he's bringing up a question about his local watering hole and one of their meal specials. He says a local restaurant changed their normal Thursday night chicken fried steak special to fried chicken breast because the price of beef is currently too high. Will high box beef prices back up product in the supply chains as consumers switch meat demand elsewhere?
I think that's a short-term problem, and I hope you get your chicken fried steak back soon because that's some of the best out there. It's one of my favorite meals. But the whole beef price being higher thing, I think it's the packers taking advantage of the situation. I think it's the retail sector taking advantage of the situation. The retail prices, absolutely, they're high right now. But once 4th of July is done, then they'll come right back down. And everything will be, I think, a little bit more normal in that realm. So you're going to probably not have your chicken fried steak for a few weeks, but just wait until the middle of July, then you'll have it back.
But I know that sentiment is about the whole July 4, it's the holiday, but the thing is, so much has been canceled in August, in July, and August. We don't know about September yet. All of this stuff, I would imagine it's been really hard to follow. Is there any trend? Is there any, well, this is what it, how do you make sense of all of this? Because it just doesn't seem that there's any norm to make any sense of any of these markets.
Yeah, that's a good point. With things canceled, it's been interesting to see, who is at home grilling out. Different states have different ruling yet on what you can do for your get-togethers. So I know that where I live in my community, things are opening up a little bit more, and you wouldn't think that any time had passed. People are back out at restaurants. People are doing takeout orders. You can smell the grills in the neighborhood all the time. So there's, it's just going to be maybe different in different pockets of the country. And yeah, you're right. It's going to be hard to figure out what normal is and how to figure out how to watch to see where the normal patterns are. So something that we're going to have to tackle in the future.
Let's talk about your neighbors that are in the dairy business. Got a couple of great questions here. I'm going to go to Adam in Wisconsin. He wants to know, where do you see milk supplies heading through the remainder of the year and the first quarter of 2021?
And the answer is I don't know, and I'm curious too, because we don't know for sure where the milk production is because of the producers being asked to cut production during the supply chain issue from COVID. As I said on the show, some farms were asked to cut production by 10%, some by 15, 20%. So we are about to find out in the upcoming government reports where that production cut actually was and what does that mean. We're also at the point where in Wisconsin, I had talked about it months ago that we were having a hard time securing feed, and our corn basis was positive for a while. So that still is the case, and we're still waiting to get that first crop hay cut. We had a lot of winter kill where we live, so it's going to be something to just keep an eye on going forward. And I think each state is going to have a different production number, but I don't know is the answer.
All right. Well, maybe I can pin you down a little differently with Chris. Chris in Wisconsin's asking a little bit about some of the government assistance that's come when buying some of these products. He was saying the $317 million buying of dairy products due to the Farmers to Families Food Box program. Is this putting an artificial bubble in the dairy markets? Because we don't seem to have those cow numbers declining.
Yeah, I don't know that it's going to be an artificial bubble. I think it just helped to make sure that we got product used and put in places where it could be used. I don't think it created new demand by any means. It was just making sure that we kind of keep things moving and keep the product there. So I don't personally, I could totally be wrong, I don't know that it's going to be an event as much as watching export demand is an event, and as much as watching and understanding where production is in the coming months could be the event.
Keep watching those reports. All right, last question. This is where, do you have that snow globe yet? I need you to figure out.
No, I gotta get crystal ball.
What's the next Black Swan event?
Dun, 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 dun. Okay, so we can talk election, we can talk Russia, we can talk, the CDC today was talking about maybe that with the COVID numbers going back up, that they would have to implement the restrictions that they had back in March. So I'm sure we're not done. 2020 has been quite a year, so I'm sure we'll probably have 3 more Black Swans.
And that's and it's lighthearted, but it's serious at the same time, because what we would have made a big deal about for weeks and weeks and weeks is kind of like and we move on. We're so used to the unexpected now.
Right. That's what you need to do with your marketing. You need to be prepared for whatever scenario might unfold. And so that's why it's important for no matter what commodity you're growing, be ready to know what you're going to do if the price rallies a little bit or a lot for the case of grains, depending on how weather is this summer. And then at the flip side, if all of a sudden we get into a fight with China again and they threaten to not buy our products, be ready to have a plan in place in case prices go down.
And call your advisor if you need to. Naomi Blohm, thank you so much. Good to talk to you.
Thanks for having me.
All right, next week on Market Plus and on the television program, we'll follow the close scrutiny Congress is giving U.S. trade relations, and Ted Seifried will join us to analyze the markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have a great week.